Hello traders, you're welcome back to the Forex Geek channel. In this video, we're just going to dive into a strategy that many traders use to capture great opportunities in trending markets. Basically, this is a stock strategy that is about pullbacks. Okay, it's a pullback strategy, the stock pullback strategy. So if you've ever wanted to know how to time those perfect entries when a stock dips, but the trend is not over, this video is for you. Before we dive in, make sure to hit the like button if you find this content useful and subscribe to the channel so you never miss an update. All right, let us get started with understanding stock pullback strategies. First of all, let us define what a pullback actually is. All right, a pullback is a temporary reversal in price. Now, this is an uptrend, right? This is an uptrend. But because price does not move in a straight line, there are always pullbacks. So this is what we call an impulsive move. An impulsive move is the move in the direction of the trend. Then this is just a pullback. This is another impulsive move. This is a brief pullback. It's another impulsive move. This is a pullback, and so on and so forth. So pullback is just a temporary reversal. It's temporary because price does not move in a straight line and the trend is upwards, for example. And because price does not move in a straight line, there must be a pullback. So that's why it's temporary, because the price is not going to reverse. Okay? Now, understanding pullbacks is crucial because they offer excellent entry points for traders who want to buy into an uptrend at a better price. For example, if you caught this uptrend, right, you got a good opportunity. You found out that this uptrend was valid, but you don't just want to jump in at any time. Pullbacks will offer you better entry points. Reason being that after a pullback, there has to be an impulsive move. According to market structure, once a pullback has completed, there has to be an impulsive move. So when you get a pullback, instead of just jumping into the trade randomly, ideally you should wait for a pullback, and it's going to offer you a better entry point. You can then enter once the pullback has concluded. When another pullback has concluded, instead of jumping into the trade around here, just wait for a pullback to occur. Right after the pullback has concluded, you can enter your trade, and so on and so forth. So if a stock is trending upwards, any price dip could be an opportunity to enter the market at a better price. To assess this, you will need to look at key indicators. You can be looking at candlestick patterns. For example, getting a bullish confirmation candlestick pattern after a pullback. You can also be using technical indicators like moving averages, which are one of the most reliable tools to determine the overall trend of a stock. Okay? Whether you are using moving averages or you are using price action, the main thing is you have to look for a confirmation. All right? Now, another key factor to watch during a pullback is support and resistance levels. These levels represent key price points where stocks tend to either reverse or consolidate. In an uptrend, like this example that we have here, the pullback may test previous support levels. All right? Pullbacks may test previous support levels. For example, we can see here, this is a support level, right? Support, broke and turned into resistance, and then broke and turned into support again. So you can see that this same level was what was retested here. The same level that we had here is exactly what was retested here, is retested here. So it's good to have your levels mapped out as well. All right? And then you can also use an indicator such as the RSI. If you want to use moving averages, you can actually decide to use the 50 EMA and the 200 EMA. Okay, price trading above the moving averages indicate bullish momentum, bullish trend rather. Price trading below the moving averages indicates bearish trend. Then for your RSI, because we're talking about pullback strategies, one of the best indicators to use during a pullback is the RSI. This oscillator helps you determine whether a stock is overbought or oversold, which is key during a pullback. So when the RSI is below 30, the stock is considered oversold, and a pullback may signal that it is ready to reverse direction. Conversely, if the RSI is above 70, the stock is considered overbought, and a pullback could indicate the start of a larger decline. Now, by monitoring the RSI during a pullback, you can get a better sense of whether the stock is primed for a continuation of the trend, or if the pullback might turn into a full reversal. Okay, while stock pullback strategies can be profitable, risk management is key to ensuring long-term success. When you enter a pullback, there is always the possibility that the price will continue to move against you, which is why using stop loss orders is essential. A stop loss protects your capital by automatically closing your position if the price moves beyond a set level. For example, if you are in a buy trend, a bullish trend, I'm going to recommend looking for only long positions, okay? So after a pullback, you look for a bullish confirmation pattern, a bullish candlestick pattern, or maybe you use technical indicators to confirm your bullish move. After you enter your buy trade, your stop loss order, which is going to help limit your losses, can be below recent swing low. Take profit is also crucial. All right? Your take profit is very, very important. You can set your take profit for a buy trade around resistance zones. Okay? It's also crucial to determine your risk to reward ratio before entering a trade. If the reward is greater than the risk, it might be a good opportunity to enter. However, never risk more than you are willing to lose, especially in volatile markets. To wrap it up, the stock pullback strategy involves identifying trends using technical indicators like moving averages, RSI, and support and resistance levels, and also managing your risk effectively. The pullbacks provide great opportunities to enter trades at better prices, but timing is crucial. All right? By understanding the underlying trend, using technical analysis, and incorporating proper risk management, you can make well-informed decisions that could improve your chances of success in the stock market. So if you found this video useful, make sure to like, subscribe, and comment with any questions or your experiences with stock pullback strategies. Thank you for watching, and I look forward to seeing you in the next video. Happy trading.